in the money. Karl Eggerss is chief trader at Frischberg, Jordan, and Coletta Advisors, live with us out of the CME now. Karl, good to see you. We can talk about the data. In fact, there's a lot to talk about. I want to get to the Geithner comments on the SDR and the dollar as well. But probably more importantly, considering the crisis, is what's been happening with Treasury buying. Hasn't gone well last night, at least. Certainly didn't go well over in the UK last week. What's going on, do you think?
I think it's interesting. You have this, it may be more interesting than what's going on in the stock market, because you have this real battle going on where the market seems to want to push rates higher, A, because stocks are going up and that money is being used as a source of funds coming out of treasuries going into stocks. And B, I think there are people concerned about inflation down the road, not necessarily tomorrow, but maybe in a few months. And because of that, you have the market wanting to push rates up. On the other hand, we have the Federal Reserve, who pushed them way down last week successfully. So we have this tug of war, and I ultimately think that it's very hard to go against the Fed, but I ultimately think the 10-year rate is actually going to go higher on the U.S. Treasuries.
Interesting, Za. Let's pull up that chart and take a look at that, and so we can talk about it as well. Show viewers. If I'm not mistaken, just before the intervention, the Fed coming in and saying, look, we're going to buy $1 trillion plus worth of paper, 2s to 10s in that range. We have the 10-year at about 3% or so. It knocked about fully half a percentage point off. That took it down to 2.5. Now we're back up to pretty much the levels where we were before the intervention. So this tug of war, right? It sounds like you're saying, Karl, that do you think the market's going to win?
It's difficult to say, and I know you don't want to be on the other side of the Fed, but it looks like they may win. Now, what's interesting is that we are seeing mortgage rates come down. And so, of course, all that refinancing that took place in November and December, that really 80% of those didn't go through. I think this time we're going to see a lot of them that actually will go through, and that's why you see companies like Fidelity National Financial doing very well here at a 52-week high, near a 52-week high, because that's what they do. They collect fees from real estate closing transactions, and I think we're going to get a lot of those. So we are seeing mortgage rates kind of in that lower range, and I think the Fed would love to see them down in the lower 4s. Yeah. But I don't know if they'll quite get there or not. But it is interesting because we have this tug of war, and I think there's no question that ultimately I think the big concern for a lot of investors is inflation down the road. Obviously, we're battling deflation right now. I think investors are looking around and saying everything around me has gone down in price in my world. Holding U.S. dollars has been the one good thing the last couple months. That's been reversing as of late, and I think it may continue. So I'm actually short the dollar right now, but I think that's why you're seeing commodities and so forth rally. And the last time I was here, we talked about commodities. I said if there's one thing that I would own, it would be commodities. We've been seeing that run up. We've been seeing copper. We've been seeing the Freeport-McMorans go up. And I think that continues.
Okay, so it sounds like the short dollar long combos trade is back on. But backing up a bit and talking about why the dollar specifically overnight was under pressure, Geithner comes out at a Council on Foreign Relations due event, and he says, yeah, sure, I'd be more open to or I'd be open to more use of the SDR as a reserve currency. Then he backtracks and says, well, actually, the flip side of that is I still think the dollar is the dominant reserve currency. It's in the U.S. interest to have a strong dollar, et cetera, et cetera. What got me more was not so much the flip-flopping, but him coming out and maybe being a little bit too honest, saying, well, look, China's proposal to use the SDR more and to get more into a global reserve currency, I haven't actually read the proposal. I mean, somebody should have briefed him on that.
Well, yes, and I think what a lot of these guys are doing now is it's kind of the cart leading the horse. I think one thing they're doing is throwing stuff out there. They're saying, hey, let's see what people's reaction is to this. So let's just say we're open-minded enough to get and to use some other alternative currency, some new currency, and just see what happens. And then they react to it. I mean, doesn't it seem like the whole AIG situation, after you have this big uproar and it was on the nightly news and all over the world, and then they come back and say, well, we're going to put this 90% tax in. So to me, it's getting it out there, and it's talking out of both sides of your mouth and just seeing what the reaction is going to be, and then maybe coming back and do anything. But at the end of the day, I mean, that's probably years off if anything was ever done.
All right, sounds like the administration has a bit of an issue with the message control there, consistency. Karl, we got to go. Great to talk to you, sir. Thank you for the time. Karl Eggerss, chief trader, Fisher, Jordan, Coletta Advisors, live from the CME, Mans.